Imagine waking up one morning, checking your investment portfolio, and seeing that one single AI stock made you more money overnight than your salary made all month. Sounds crazy, right? But for thousands of investors across America, that's exactly what's been happening. Right now, the United States is in the middle of the biggest AI investment boom in history. Billions of dollars are flooding into artificial intelligence. Hedge funds, billionaires, big tech companies, even average people. Everyone wants in. But here's the question. Nobody is asking enough. Is this the biggest wealth opportunity of this decade? Or the biggest financial trap? Because history has shown us something important. Whenever everybody rushes into one thing, danger usually follows. And what's happening right now with AI looks very familiar. Let's go back for a second. In the late 1990s, America saw the internet explode. Investors were throwing money into anything with .com in its name. People became millionaires overnight. Companies skyrocketed. Stocks went insane. It felt unstoppable until it crashed. Hard. Over $5 trillion vanished. Gone. Just like that. And now, experts are starting to compare AI to that exact moment. But this time, the numbers are even bigger. Companies like NVIDIA have added trillions in market value. One company. Trillions? That's bigger than the GDP of some countries. Think about that. Why? Because AI runs on one thing: chips. Powerful chips. The smarter AI gets, the more computing power it needs. And the more computing power it needs, the more money these companies make. That's why data centers are being built all over America. Massive buildings filled with thousands of AI servers running 24 hours a day, using insane amounts of electricity. Some reports say AI could soon consume more power than entire small countries. That's how massive this industry is becoming. States like Texas, Arizona, Virginia, and Nevada are becoming the new battlegrounds for AI expansion. Land is being bought, billions are being invested, jobs are being created. Infrastructure is expanding. This isn't small. This is huge. But here's the scary part. Not all this money is coming from profits. A lot of it is borrowed money. Debt. Massive debt. Companies are betting big. They believe I will make enough money in the future to justify what they're spending right now. But what if they're wrong? What if demand slows down? What if AI adoption takes longer than expected? What if regulations hit hard? What if the technology doesn't scale the way investors think? Then what? That debt becomes dangerous. This is exactly how financial bubbles are created. Optimism, hype, fear of missing out, and then reality. Right now, retail investors in America are jumping into AI stocks at record speed. Why? Because nobody wants to miss the next big thing. Everyone wants to find the next Amazon, the next Tesla, the next giant. But here's the truth. Most people are late. By the time average investors hear about a trend, smart money has usually been there for months, sometimes years. And smart money? They're already asking harder questions. Which AI companies are profitable? Which ones are burning cash? Which ones have real customers? Which ones are just selling hype? That's the difference between investing and gambling. Let's talk about winners. Companies building AI infrastructure, chip makers, cloud companies, cybersecurity firms. These are seeing massive growth. Why? Because every AI company needs them. They sell the tools. And in a gold rush, the people selling shovels often make the most money. That's what happened in the California gold rush. Thousands searched for gold. Most failed. But the people selling equipment, they got rich. AI investing works the same way. Sometimes the best investment isn't the flashy company. It's the company behind the scenes. But now let's talk risk. The Federal Reserve. Interest rates remain high. That changes everything. Borrowing becomes expensive. Expansion becomes harder. Risk becomes bigger. If the economy slows, companies spending billions on I may have to cut back. Layoffs could happen. Stock prices could fall. Investors could panic. And when panic starts, markets move fast. Faster than most people can react. Another huge risk? Regulation. Governments are starting to pay attention. AI can create fake videos, fake voices, fake news, entire fake identities. That scares lawmakers. If strict regulations come in, some companies could lose momentum overnight. That's a risk nobody talks about enough. Microsoft. And then there's competition. Google right now. Meta, every major tech company, is fighting for AI dominance. OpenAI, all fighting, all spending billions, all racing for market share. But not everyone can win. Some will dominate, some will disappear. That's how markets work. Here's what smart investors are doing right now. They're diversifying, not putting everything into one stock, not chasing hype, looking at fundamentals, revenue, growth, debt, cash flow. That's how serious money is made. Because hype creates attention, but fundamentals create wealth. And right now, America is standing at a financial crossroads. AI could become the biggest wealth generator of the next 10 years. It could create trillion-dollar industries, new jobs, new technology, new millionaires, or it could become one of the most overvalued sectors in history, leading to a major correction, a painful one. Nobody knows yet. And that's what makes this so important. Because the decisions being made right now by companies, investors, and governments will shape the future of money itself. 10 years from now, people will look back at this exact moment and say one of two things. That was the beginning of something massive. Or, that was the bubble before the crash. The only question is, which side of history are we watching right now?